Hello folks, I'm recording this video on 7th of May 2017. Actually it's 12:22, it just turned 7th. So um, this is something that could apply in the upcoming week, this discussion today. So this particular ETF, the Exchange Traded Fund, is SPY. It's the ETF for S&P 500. Most of you would know that already. I'm just giving it out so that in case someone didn't know that, they will know. Anyway, so this is a monthly chart, as you can see here. It's a very long-term view, right? So I had earlier said in one of my videos on S&P that I see a Elliott wave pattern. You can see number 1, 2, and number 3, number 4, and then number 5. So the question is, when is it going to end? Is it ending here, or is it going to go up further and then end there? Because impulsive waves are really impulsive, as the name suggests. So normally wave 1, wave 3, and wave 5 are impulsive in nature. Uh, this is 3, by the way. So we never know. It's kind of like catching a falling knife. You can't really figure out when it's going to end. But there are some ways by which you can make some educated guesses. So let's see. Let me go back. So um, that's what is going to happen most likely. So fifth wave is continuing, and it potentially is going to go up for a certain period, and then it'll probably turn around and go down. That's when I'm expecting a market crash. Not a crash, maybe a correction at least. It should correct like some huge, reasonably huge correction. Let's say even if it comes down to say 180 or something from 240, 250. That's a huge, correction. Or it could even go be further. We don't know. But anyway, we're not talking about that in this video. So let's just come to a lower time frame. Before we do that, let's just quickly draw a Fibonacci retracement. I'm going to take it from here up until here. Just approximation, guys. There's no need to be very specific here. Let's come down to a daily chart. We just delete this earlier Fibonacci that I had written. Okay, so you can see that this is the Fibonacci I drew um, in my monthly chart. Let me just go back and just make sure. Let me see if there is anything else. Okay, I don't know why I see the other one. Let me, too small to show. Let me get rid of that. Okay, so now you can see that that's gone. Let me come back to the daily. Yes, this is more like it. So you can see, this area right here is the Fibonacci. um, I call it B point. Let me just put it this way. Where I start, I'm just going to draw here so that you know what I'm talking about. When I start a Fibonacci, I start from A point, and then this will be the B point, and then it retraces. We could call that C point, and then it goes up, and then it touches the B point, and then that's when the extension starts. This could be called D extension, that is 27%, and then further down if it goes, that could be called E extension, and then that would be 50% extension. Okay, so just thought there. So in that aspect, it's going to be B, and this is 27%. So even if you don't understand, don't worry about it. That's not all important. So 27% is the first target we would expect based on the monthly Fibonacci retracement I had drawn. So obviously the price is nowhere near 240, 250 in SPY, and that's potentially what we could exploit in this particular setup. So let's see how that is done. Let's go back to the mouse cursor. Okay, so let me just put my mouse. It's 243 somewhere, 243 and change. We are right now at 2439. So what I would do is, I would draw a little bit smaller Fibonacci here actually. So what I'll do is I will just draw this Fibonacci from here to here. Actually, it would have been ideal to take this trade on 4th of May, We are a little bit late in the game, but nevertheless, I think there is still room to grow. So, as you know, French election is coming up. That is actually today in France on 7th of May, and that would most likely result in a positive movement in the market in Europe and around the world, especially US too. Um, so that is what we're probably going to be able to capitalize on. So, so what I would say is the potential entry point, or rather, best entry point for this trade could have been right here, um, right in this area. The reason is we know that long term the market is up based on the monthly, right? And now here we're looking basically looking for an entry point to enter into the market long. The price went up from here to here and then it retraced. So as I'd given my example, this would be A, this would be B, and where it retraces to would be C. In this case, it retraced up to 23.5%, or rather 23.6, which is one of the Fibonacci retracement levels. You can see the different levels here: 20, 23.6, 38.2, 50, 61.8, 78.6, or it could be 78, and then 100% full retracement. So it um, retraced, and it is turning around and going up, as you can see. So ideally this would have been, this is a hammer pattern here, so you can see that there's a lot of hesitation for the price to go down further. So you could have bought it here somewhere. Obviously if you have not bought it, I mean it's right now at this location. um, so I would think when the market opens on Monday, anywhere in this area be a reasonable location to make the long, I mean make the call to go long, which is 220, 239.70, 239.60, 70 change around that area. So let's just put a blue line here somewhere. So this is probably the approximate area where one could go long. Okay, and obviously the stop would come somewhere around here. If the price closes below this, obviously it's your time to get out. If it's a long, I mean, if I'm talking about quick little trade, I'm not talking about a trade that's going to last for weeks and months. It's going to last probably a couple of days. And to get out, the meaningful location would be this area, not this one. Let me just draw. This would not be the best place to get out, even though it's one of the places to get out. But in this case, I would rather hold it till this area. The reason being, um, um, in for this Fibonacci from here to here and retrace and going up, this would be the 27% first target actually, but then it can go to the second target. The reason why I would hold it till the second target is because it is coinciding with the 27% from the monthly Fibonacci. This area, this area is like 50% of this little Fibonacci I drew, and it's also coinciding with the monthly Fibonacci 27%, where the price is likely to go, in a long term, right? So that would make it would make sense since they are very close to each other. It's only a couple of $2. I would rather wait it out. So if I enter somewhere here, I would put my stop here, and I would put the take profit somewhere here. This is for a long, I mean, a quick little long trade. And if I was, you know, buying into this ETF on a longer time frame, then I wouldn't obviously come out here. I would just hold it and see if it gets to the next level, that is 50% level in the monthly chart, which I would just show you where it is, which is like all the way up here 268. It kind of seems impossible to get to from here, but in the markets you never know. What if one had thought when the price was at 150 that it could never go to 200? Sure enough, we are at 200 right now. Sure enough, we are at 239. So it's not um, inconceivable to see this market SPY at 268. So that would be the target for a longer term trade if someone wanted to hold it for that long. Okay, so again, it's not a trading recommendation, it's just my analysis as I see it, and I would encourage you to do your own analysis and make your own calls and make your investing decisions based on that. Okay. So if you like this video, please feel free to give me a thumbs up. And if you'd like to be notified of any new upcoming videos, as soon as I post them via email, you may want to subscribe to my channel, and you'll be notified via email. All right. Thank you so much for watching. I hope it was useful. Have a good day, and I'll talk to you soon. Bye now.